Welcome all back from an amazing, relaxing, much needed weekend. We are here for our money making Monday, motivating Monday. Drop some fires, dollar signs, 7 light bulbs, notebooks, whatever you want in the chat to show your gratitude for this space, place, and opportunity. I am your co host, Queen Bowens. And if you don't see your accountability partner on this call, make sure that you send them a reminder text to let them know, hey, agent session is underway. Drop some dollar signs if you were successful in the market this morning for our New York session. Outstanding. I appreciate all the love in the chat. Please keep that fire, the sevens, the hearts, the love growing and flowing in the chat. If you don't have a pen and notepad, you are doing yourself a disservice because note takers are definitely money makers. Without further ado, I'm going to get myself out of the way and reintroduce to you all our new lead Forex educator, none other than Mr. Jeremy Glover. Sir, are you ready?
I am ready. Thank you. Thank you. How's everybody? Drop some ones in the chat if everybody is feeling good today. I know I'm feeling supreme. How is everybody feeling today? All right. Got them ones in the chat. All right. I'm feeling it. Awesome. All right. So yeah, dropping also while you're dropping those ones in the chat, drop where you're from in the chat. Cause I like to hear, I like to see where my voice is touching today, right? Because wherever my voice touches is gonna be, where you're at. So, I'm spreading the energy, spreading the love. Um, Drop where you're from in the chat. We got Texas, we got Philly. Why y'all dropping those, dude? VA. All right. Turkey, North Carolina. How's North Carolina out there? Hopefully you are we got hit with that hurricane. So hopefully everybody in North Carolina is doing good. I saw you drop some ones in the chat. So I see that you're doing good. So I'm glad to see that you're doing good after that hurricane. Good. Awesome. I'm in South Carolina. We got hit pretty hard too. We got hit really hard. A lot of people are out of power. A lot of people, still are have some water damage and things like that. So we're gonna spread that energy, that positive energy, to those who was hit by the hurricane. And we actually have another hurricane coming, right? So just be on the lookout for that. Hurricane Kirk, I believe, out there in the Gulf. So while we are here making money and printing money, and building this community, the weather could do what it do. We just gonna keep it safe, right? Right. Screen. Share. All right. Drop some ones in the chat if you can see my screen. Awesome. All right. So I know last time we talked, the last class we had, we talked about the different flags, right? We talked about the different patterns. We still tapping into the patterns because the patterns is how you make the money. The patterns is how you be patient and waiting on that breakout, right? So we're gonna do. I'm gonna do it like this. So the first pattern, right, is called a flag. We did go over the flag, but I had it wrong. So I want to make sure that I, pretty much dot my T, dot my cross my T's and dot my I's when it comes to the proper lingo and the proper language when it comes to the trading. So I was obviously drawing wedges, right? So as you can see, this flag is a flat, pretty much flag, and it looks like it has a W in the middle of it. So anything that's on an uptrend, and when you see this flag form, you want to wait for that breakout on the top. You want to wait for that breakout on the top. And once it breaks out the top, you're waiting for that break and retest, right? The break and retest, and then this red line right here is your stop loss. So this even shows you where you can put your stop loss to where you don't have to worry about. It's always you always got to put that stop loss in because it's what non-negotiable, right? That's a non-negotiable product that you have to put in when you're trading. So that is the flag, right? The bullish flag. We'll go over the bullish flag patterns first, and then we will go over the bearish flag patterns, and then we're gonna actually tap into the charts because this is markup Mondays, right? Markup Mondays it is. So we're gonna get into the charts. So the next pattern is the wedge. So I was obviously showing y'all the wedge, and because it looked, I had it at a point, and it pretty much went at a point and then went the other way. But obviously, but what you can see as well, with inside that wedge, we have a W, right? I taught y'all the W's and the M's, right? So this is pretty much part of the W's and the M's because as you can see, this is a W that hit the bottom of a structure, right? Continued up. So just look for that break and retest of this wedge when you find this wedge, right? Um, super important that you make sure that you wait for the extra confirmation to actually get into the trade, right? Which is that break and then the retest and then the continue, right? So the next one we're gonna do is the ascending triangle, right? And the ascending triangle, descending triangle, meaning it going down. So we're probably gonna get at that on the bearish side of things, right? All right. So the ascending triangle, it looks like the wedge almost, but except it's ascending, it's going up. Whereas the wedge looks like it's going in a downtrend first, and then it hit this structure. So it's hit this structure at the bottom, and then broke out of the actual wedge. But right here, the ascending triangle looks like it's a uptrend, right? And then it gets into consolidation, does kind of like a W formation right here, and then continues out, right? So how you will look for this is the look for the top of a structure and this part right here of the structure, right? And it's actually making an ascending triangle, meaning it's going up. But you always want to look for the break and the retest, right? Or what we like to call the pullback. So these are considered the break and retest and pullbacks. So that is the ascending triangle. Okay. And the next one is the pennant. This is the pennant. Pennant looks almost similar to the ascending triangle, right? But except the actual triangle is not pushing up. It's pretty much hitting a zone right here. So I like this, the pennant. All right. So this is literally doing another, triangular shape, before it actually breaks out of that zone. But as you can see, it's also making a W, right? A W formation by touching these zones and then breaking out, make this being the middle of the W, this right here being the leg, this right here being the leg, and just like I was saying in my recent classes that the W you want to get in the bottom of that W, and that's literally where that is, and then it pushed out, and then you put your stop loss, and then you figure out what your take profit is going to be. A good measure to measure out your take profit, 15 to 20 pips, because the market moves 15 to 20 pips at a time. And so that's why when you're in a bad trade, that's why it goes down, 25 pips to 30 pips, because that's how the market moves. The market moves in 30 pips to 25 pips segments, right? So that is the pennant. So the next one is called the cup and handle, right? This is the cup and handle. So it makes a cup, right? And that's how you're actually able to get in a uptrend, right? So we got and I know we y'all broke down higher highs and lower lows as well. That is super duper key. I did see a class on that. Shout out to our CEO for actually doing the classes and doing that class in particular, because higher highs and lower lows are super duper important to the basis of trading, basis of forex. All right, so we got pullbacks right here, and it looks like it's pretty much just ascending up, right? In a couple pullbacks here. Then as you see, the red candles become less, and then there's more green candles, right? So that little green candle right there is the retest that you will get in for, right? So we're gonna look at these patterns on the chart to see if they actually match up, and they should match up because the market moves in the same patterns all the time. That's why I call trading. I compare trading to geometry, right? Because you have to understand the geometric patterns inside the market in order to make money, in order to be a profitable trader, along with the trade plan, right? Um, Super duper key. So this right here makes the cup, right? So that makes a cup, and this right here makes the handle, right? So you definitely want to make sure you put in your stop loss and your take profit as well when you find it when you're finding these patterns. So all right, so the next one we are familiar with because I tapped into this with y'all. This is the inverted head and shoulders pattern. So this is happening after a big drop is happening, right? After a big drop happens, it makes this symbol, right? So what makes it this is it considered the shoulder, and anything below the shoulder is the head. It can make it doesn't have to actually be a specific point, but as you see on it makes like a W formation at the bottom of the head, and then it goes up, pulls back, and this is considered the shoulder, right? So you can actually enter right here. I teach you to enter right here because that is considered the shoulder, and you put your stop loss below the head, right? Below the head would be a good place to put your stop loss. But right here, it shows it breaking the neckline. So right here is considered the neckline. Right here is considered the neckline, right, of the inverted head and shoulders pattern. And right here is showing you for it to break the neckline. Once it breaks the neckline, pull back, for the retest, and then you buy. So that little retest candle is your extra confirmation. So you definitely want to have extra confirmation. I'm not asking you to, rush into a trade, prematurely. You definitely want to see this pattern before you hop in a trade. But if you need that extra confirmation to actually come back down here and touch the top of the zone for you to get into perfect buy and calculate your pips on the way up, 15 to 25 pips. And that's how you can do that. All right, so we're gonna move down to the bullish patterns next. Anybody have any questions, comments about the bullish patterns? We're gonna do the bearish patterns next. Okay, nothing yet. All right, but if you have any questions, we'll resurface the questions at the end of this slide. All right, so this is the bearish pattern, right? So the bearish patterns, meaning the market is going down and it's going to keep on going down. No need to even change it or believe that it's going to do anything different, right? Because the market is not going to do what you wanted it to do. That's one thing I have learned. The market is not going to do what you wanted it to do. It's never going to do what you want it to do. You might want it to buy because you see it's bouncing off of this zone, but the market can still jump right through that zone, right? So this is why you have to have extra confirmations, right? Extra confirmations and extra check marks, I would say, or extra go down your checklist, And your checklist is what? Your checklist is usually your trade plan and follow your trade plan to the T, right? And if your trade plan says wait for that extra confirmation candle, wait for that extra confirmation to actually touch that zone in order to get into a buy or get into the sell, right? Because all these patterns still have a break and retest method, right? So this is considered a bearish flag, right? Bearish flag meaning that the candles is selling and then it gets into a consolidation zone, right? Because there are three ways that the market moves, right? The market moves down, the market moves up, and the market moves sideways. So when it's moving sideways, you wanna definitely not trade in that consolidation if you're not an advanced trader. Stick to the break and retest, the breaking out of the zone and touching the zone and then getting into your sell, then getting into your entry, right? And then putting your stop loss above the last high, right? So that's the bearish flag. And as you can see, it went into consolidation, broke below the zone, touched the zone again, and continued to sell. So we're gonna go to the next one. The next one is a wedge, but I can already see multiple um multiple patterns inside of that wedge. So, all right. So this is the wedge, right? The bearish wedge at that. So the bearish wedge, as you can see, you see the normal triangle that is written out, right? Most of these are making triangular shapes, right? So but as you can see, how you can also know that it's about to reverse is these three touches right here. One, two, and three. And the third one is using your entry, but you want that extra confirmation because just because you see this pattern doesn't mean it's gonna sell. It could might as well after you put into this sell, it could buy because you didn't get that extra confirmation. That green candle right there is your extra confirmation. All right. That's the wedge, bearish wedge. All right. So the next one is a descending triangle. So, the other one was a ascending triangle. This is a descending triangle, right? Just like I say, all of these look like triangles to me. But we're gonna pretty much differentiate what the pattern is looking like once we look on the chart and confirm back with this template, right? So this is normally what happens when a bearish market, right, is selling, but then it gets stuck inside this little bit of consolidation, right, and makes this triangular shape. And it's descending because after it drops below this structure, because this is considered structure, all this stuff is considered higher highs, lower lows, structures, and um, and yeah, so and actually after it dropped below that big push below, right? You want to wait until the confirmation candle closes, which is this one, right? This green one, where it came back, touched the zone, and sold, right? And then you hit you calculate your take profits and put your stop loss in. So that's the descending triangle. So we went over the bearish flag, the bearish wedge, and the descending triangle so far on the bearish side of things. And let's look at the next one is the pennant. So the pennant, this is obviously the bearish pennant, right? Meaning that the market is already selling. You've already heard this phrase before, the trend is your friend. And it is. You don't want to trade against the trend. You start trading against your friends, right? The stuff starts to get a little sticky, right? Your situations start to happen. You start to get into the red, right? You don't want to get into the red with your friends, right? Or your family members, right? So you want to stick to the trend. And this trend is selling, but this pennant, as you can see, it sold and broke below, right? This right here is a red confirmation candle, though. It still came back and touched it, and it actually came back and touched it on this on this actual candle as well, and then started to sell. So that's called the pennant. All right, so this is called the inverted cup and handle. The inverted cup and handle, as you can see, the inverted meaning it's going down, right? It's going in a downtrend. It's considered the pullback. It touched this zone again. Now, what can get you what can get you in trouble is what I was telling you. Remember I was telling y'all about you thinking that because it's making a W formation, right, that it's gonna buy. But look, as you can see, the W formation is still sold. So that is not always accurate, but it's nine times out of 10 it is. But that's why you have to have that extra confirmation to happen. So that extra confirmation is it dropping below here. But just because it dropped below here right now doesn't mean that this can't form an inverted head and shoulders, because this can form a inverted head and shoulders still as well. So just like I say, there's a 50% chance that you're right in a trade, and there's 50% chance that you're wrong in a trade. It's a 50-50 chance, right? It's just you want to have those extra confirmations in order to make sure that your trades are in the 90th percentiles, right? All right. So the next one before we get on the charts is the head and shoulders pattern, which is what we have gone over already, right? The inverted head and shoulders patterns, the M's, the W's, and the head and shoulders pattern. And these form when the market is, well, this forms actually when the market is buying, right? Is buying and then it's about to reverse. So these are considered reversal patterns that you're seeing. So this right here being the shoulder, anything above here is the head. But just like I say, it's not going to be an exact point going up and down. The market goes down, up, sideways. So it could go. This could be the shoulder, and the head could just be consolidation for a while, and then it could drop down to the neckline, right? Buy again, and then we're looking for the sell at that shoulder. All right, so went over those reversal patterns. You're about to get on the charts now. So while we're getting set to get on the charts, make sure you drop some pairs in the chart in the chat to so I could actually look at those pairs for you, since we are on markup Mondays. Got some pairs dropping in the chat.
AU.
AU, okay. All right. AU. All right. So we are here. Right. All right. AU. Audi versus the US dollar. They're in a battle right now. Let's get it. All right. All right. Just a 1 minute chart. We don't want to just look on a 1 minute chart. You want to look at the full visual of it. Let's go. The hour. Does the hour look? All right. The hour. Hour looks like a sell is about to go in on the hour. Just looking at this reversal pattern right here that we was looking at. Want to like it, can do it like this. All right. All right. So on the hour, that's what that looks like. That actually looks like. Let's look back at the actual see what that matches. Looks like this. Looks like the wedge, right? Yep, looks exactly like the wedge. So that actually looks like the wedge. So we found the wedge on the hour, right? This would have been the extra confirmation. Yeah, this would have been the extra confirmation right here. And we're looking for it to drop. But that just showing you the different patterns that we just went over, and looking at some other patterns that we already looked at. So right here is considered a W, right? We're looking at the W's, the M's, inverted head and shoulder patterns, and so like I said, we just learned the wedges. So we found the wedge, and there you go. And usually when a W happens, that's usually a solid structure. So as you can see, after that W happened, it did never come back down here. So think about if you would have entered. Think about if you would have entered right here. And this right here would be all right. So think about if you would have entered right here on the W and continued up here, right? Then you got here, you got the pullback happening. So this actually pulled back here, and now it's doing this reversal pattern right here. Now that does not mean that it could totally drop or be in a sale all night. You definitely want to keep your eyes on it. Put your stop losses in, put your take profits in to make sure that you actually are protecting your account at always. Because I like to, just like I said, I like to call the stop loss your insurance policy because it protects you on the way down or on the way up, whichever way you are banking for it to go. I call that the insurance policy because can't live with that, can't live without it. All right, so that's the wedge on the hour. So let's look at what we see on the daily. Not much going on the daily. As you get higher into the time frames, then you pretty much don't see the patterns. Like I tell you, the once you get off the 1 minute time frame, 5 minute time frame, the actual wedges and the actual patterns that you don't really see them once you get up here, or you see them but they're real stretched out. So let's go back down to, let's see about any other EU, GU. Okay, we got a lot in here. All right, AU, EU, gold. Okay, E, raise, remove all times. All right, so this is the 1 week. So 1 week. So what you can do with the 1 week is to mark your zone. You could just do the top of that week and the bottom of this week. and you pretty much got your higher high and lower low. Then you just go into the daily, see what the daily looking like, right? Daily looking like looking like an M's forming, looking like it could be selling, right? On the daily. That's the top and the bottom of the yesterday. So or the last daily candle. So that top and bottom is accurate for the higher high, lower low. So you're really just looking for it to break below. You're looking for it to break below. Even on the daily, you still want to wait for that retest, right? If you're coming in long term, if you're a long term trader, you still want to wait for the retest because that's your extra confirmation, right? Or or if it breaks at the top. You want to wait for the extra confirmation, then it's the retest. There you go. So, all right. Now we're gonna go to the hour. Let's go to the hour, see what it looks like. So as you get lower into those, you start to see more patterns. All right. Nothing really is catching my eye here on any patterns. Let's go down to 5 minutes. The only thing I see is when we went over candlestick patterns, I see the actual pattern right here. So that was considered that what made that drop, and that is called the morning star. Morning star is at the top, even stars are at the bottom. And as you can see, that was in the 5 minutes. And let's see how much that drop was actually. Calculate the pips. And see, that was a 30 pip drop right there. So you could have made 30 pips, just that easy. See how the market moves 30 pips at a time, 25 pips at a time? This is just confirmation on what I just said. So then we're gonna look at the see here. All right. So this right here, same thing. So let's see. You were to enter right here. It still came back up here. So it probably was some time where, it was probably knocking people out of their trade. Because that's just the psychology of the market, right? You're gonna get into a right trade, right? It's gonna pull back on you, and you're gonna be like, "Oh man, I'm in the negative, so maybe I should get out," right? But then as you get out, what happens? As you get out, the market goes in your favor, right? So this is why you should be patient in trades and just protect your trades, right? So if I were to get into this, when I seen this pattern right here, looking for it to sell, even though it came back up here because that's what the market's going to do, it's going to literally come back up to your entry, and then it's going to go do what it's going to do because it's going to play with your emotions, right? And that's the main thing is emotional intelligence. You want to make sure that the market is not making you making you react, emotionally to because well, and I can go ahead and say this: it's hard not to act emotionally when you're dealing with your money, right? Because your money is an emotion. When there's a shortage of money, it'll hit an emotion. That's all I can say. So what you want to do is you actually want to, you know, be patient in your trades, trust your trades, right? I mean, if you take somebody else trades, you will have to trust them at a certain extent. But when you start marking up your own charts and when you're becoming confident in your trading, you definitely want to trust your trades and always protect your trades. So, say I was to enter this, right? And we're looking for it to break above here. If it was for a buy, because that's still the daily line the weekly line that we marked. If you want to have some accuracy on it, put it on that point right there, right? But if it were to push past this, you will put your stop loss up here, right? So you get it, you see this right here, this entry right here. You see this pattern right here, these three candles, right? And you're like, okay, it's gonna sell. It sells, but then here goes the extra confirmation right here, right? Here's your extra confirmation that it's about to sell again. This is your extra pullback before it actually drops. But then it drops, and what does it do? Pulls back to pulls back to your entry. So now you're nervous, right? You're like, man, I should have got out. I should have did this. I should have did that, right? Well, just be patient in your trade. Just like I say, what wins the trading game is being patient, disciplined, and consistent, right? Being consistent enough being consistent enough trading, and also being consistent enough to stay in your trade, being patient, right? So you will put your selling right here. They say you're doing market execution, selling right here, and you're putting your stop loss above here. Because if it goes above here, you're looking for it to come back here and retest this to buy. So you don't want to be into a sell when it breaks up here, because that's actually a weekly high. So if it breaks that weekly high, that is actually a strong confirmation that it's going to keep on buying, right? Because if it breaks that weekly high, that means it's going to keep on going, or it could do a fake out breakout, right? The market does fake out breakouts all the time, right? I'm gonna find an example of a fake out breakout. All right, so I'm gonna go to UJ now. There's the JPY. Let's see what we see on here. 5 minutes. We see a W right here on the left. We see a W right here on the left, right? And think about if you would have got into that at the W, right? I literally had a client, right? I had a client that I actually taught the M's and W's, and he was actually able to make great money off of just the M's and W's. Um, so yes, let's see here. All right. Anybody have any questions so far? I can open up the mic for questions now, because I could be on here talking all day about patterns and all that, but it's not going to do me any good if y'all do not understand, right? Awesome, awesome. Go ahead, Chase.
For the line, did it ever like retest? Like, did it ever like retest to the line, like right there at the?
Which line right here?
Yeah.
Did it retest there? No, it never retest there. But if you look right here, it retested the top. It retested this top zone. You see that?
Yeah.
Yeah. So it retested that twice actually. So one, and it came back here again to retest that.
Oh.
Okay. That was your question?
Yeah. Thank you.
Awesome. Thank you for your question, Chase. But yeah, so Chase had a good question. He asked, did it ever retest? And what do we say? The market normally does what? It's gonna always do what? Retest. And this right here is your retest. So even though I'm showing you how to enter the market down here, get that extra confirmation so you can be confident in your trading, right? And your extra confirmation was this retest. This retest. So you're entering right here if you're doing the break and retest, right? And you're putting your stop loss below here because you're not looking for it to push back lower after that retest. You're looking for it to, and it even came back down, right? It even came back down and almost did another retest, which that is literally back at your entry, right? What do you say that the market will come back to your entry just to play with your emotions, right? It's all an emotional roller coaster. So you want to definitely master those emotions and be confident in your trading, right? The main thing is for us to get you confident in your trading. Meaning if you put in an entry down here on the W, you're confident, right? You're gonna put your stop loss below here, right? And you're gonna hold it, hold it until you want to hold it because you see, I'm a scalper, so I probably won't hold it that long. I look at trades. Most of the time I look back at trades and I'm like, I should have stayed in, but not really because I'm not a holder, right? I'm not the person that holds the trade. I'm a person that gets in, gets out. So I try to stick to that. Whenever I try to hold a trade, it normally goes the other way. It normally doesn't go good for me. So I normally just stick to what I know, which is that. Let's see. Anybody have any questions, comments? The mic is open. Last 15 minutes, we're going to answer some questions. If nobody has any questions right now, I just want to let everybody know to make sure that tune in to the talk show, the daily Keel Bay talk show with Doc. Any questions, comments? All right, so I'm gonna go to the next pair then, since we don't have any comments right now or no questions. Oh, good discipline on your part. Oh, thank you. I appreciate you, Mr. Hussein. I appreciate you. All right, Cam. Cam has his hand raised. What's going on, Cam? Unmute yourself. Unmute yourself, Cam, if you have a question.
Okay. I
There
thought
you
I
go.
unmuted myself. Sorry.
It's
I'm
all good. It's all
talking
good.
away, thinking everybody's listening. So,
You got to practice run.
there you go. No, thank you so much. This is great information. One of the things that I wanted to find out from you, in your opinion, is what kind of indicators would or should we use to help kind of figure out what type of like a entry point we would
Okay.
see and kind of stuff like that.
Okay. I can go over indicators on my chart. And then like I say, these are just extra confirmations. So I'm gonna go over those for y'all. Thank you for that answer. I'll go over those right now. So just to let y'all know, indicators are just extra confirmation. You don't just by indicators. You don't want to go just by. You got to have those extra confirmations, right? So I just want to make that disclaimer because some people go on indicators and they're thinking that their strategy is just indicators. When a lot of people teach strategies, when really it's the basics, right? It's the market structure, it's um, the patterns. That's what they're not telling us, right? They're only showing us that they're doing indicators, and this is how you buy off this indicator, right? But that's not really how it goes. But yeah, I'm gonna go over. I can go over some indicators. So the MAs. the moving averages, right? The moving averages are for you to know where is the market going? Is it in an uptrend? Is it in a downtrend, right? So I like to use MAs, right? So I like to use multiple MAs. Usually the main ones you want to keep your eye on is the green one and the red one, right? Don't worry about the actual 8 and 10, right? But the 8 and 10 are good for for like pullbacks and stuff like that. But what you want to go by is the 200 and the 50, right? I usually go by the 200 and the 50 are usually the main MAs that I use. Mainly because the 200 is major structure, and I look at the 50 as the 50-yard line. I call the 50 MA the 50-yard line because that's usually the 50% pullback. If y'all ever heard about the 50% pullback rule, that's getting a little advanced, but I don't want to get too advanced on actually, that. But
Real quick, Jeremy, before you
yes,
leave off of this, maybe show them how to set that up. Because I
oh,
know somebody has that question. They're just not asking.
got you, got you. I appreciate that. All right. So yeah, I'll show you how to set it up. So right here, you just go up to indicators. Um, Go up to indicators, type in MA, right? And you can put one MA on there. You can put two MAs on there. You can put multiple MAs on there at one time. I usually use the 4 MA line just so I can have multiple indicators on there and still have a free trading view, right? Because trading view is free, but if you keep on adding indicators, if you keep on adding other stuff, it starts to be a little pricey, or you have to pay monthly, right? Which the monthly ones are not bad. So I do put, if you want to get a monthly, you can get a monthly, but if you want to just keep them to the minimum, you want to have at least one or two indicators on your list. But if you want to, you can go all in and get the full subscription. So the MA cross or the multiple moving average, we're gonna do moving average exponential, right? So if you click moving average exponential, then you go over here to it's called the EMA. And what you want to do is you want to hit these three. Then you want to go to settings, and it shows you the settings of the MA, right? So this is where you're going to set the length. And usually the length goes by per candle. So if you have a 9 on there, that means it's gonna pretty much calculate every ninth candle, right? And that's usually how they go. But the reason why I give y'all the actual disclaimer on indicators is because indicators lag, right? There's a lag to those actual indicators. So it's because it's doing what the market has done it's calculating what the market has done in the previous, meaning what it has done in the past. So indicators lag, but market structure and structure is actually golden. So like you could put 50 right here. What I like to do on the 50 MA is I like to make it green, right? I like to make it green because I call that my 50-yard line. And you can go here, you can actually make your line a little bit thicker if you want to see it a little bit more. So that's actually how you actually add the EMA, right? And that 50 pretty much calculates um I call it the 50-yard line because it's like a pullback. It does like a 50% pullback if you actually calculate this with the Fibonacci retracements and things like that. But I guess we'll get into all that, at another time when it comes to those. But we have, so as you can see, right, we got a push up. After we got into this entry right here, there's a push up, but it came back down to touch this green zone. It never came down here though. It never came down here to retest anything down here. It just kept on buying. but that's how you actually add the 50 EMA. And if you want to go in here, I'm gonna go in here. I'm not gonna add another one. I'm just gonna go in here and show you how to edit it so you can do the 200. But you'll add two of these on there if you were to use the 50 or the 200. But just like I said, I use these for direction. I like to know if you want to know the direction of where you're trading. This is extra confirmation to say that it's in an uptrend or a downtrend. So 200, and then what I like to do for the 200, I like to make that red, right? You obviously want to color code your stuff so you can actually know, you may have a different color code than me. I'm just letting you know what I use, not saying that you have to use that. But so as you can see, usually when it's below the red, right, we're selling. So we're looking for majority sales, or if you see it coming and touching the zone. So if you see right here, it touches here, right, and 9 times out of 10, it's actually calculating a very strong structure. So we can. If anybody have any questions or anything while I'm going over this, y'all can raise your hand and ask those questions. Miss Brown, how you doing? You can unmute yourself.
Okay. I'm doing fine. How are you?
I'm doing supreme. How you doing?
I'm good.
Good, good, good. Good.
So I'm trying to understand the MA. I
Uh-huh.
think you said, I think you said it, yeah, MA is set up to see if the market is on an up or downtrend.
Uh-huh.
Okay,
Yes,
got it.
ma'am. Usually it shows usually if it's above the MA, it's usually uptrend. You're looking for pullbacks to buy, right? And
Hmm.
then as you can see below here, it bought right here, right? But that's how you're gonna know market structure, right? Because if you know the structure, you would know to not you this is obviously looks like it could be a buy, right? But it still didn't break this zone yet, right? So we're still looking for sales. So your main thing is if you're gonna be going by the MA or using the MA for extra confirmation, my thing is to find your market structure and then add your MA on there. So after you do your market structure, add your MA on there and see where it actually touches the MA, right? Um, okay. Cool. All right. So like we got every.
Thank you.
So I'm gonna look up the SB for Chase. I'm gonna go look at the SB for Chase. Yes, Miss Brown.
Sorry, I was trying to lower my hand.
Oh, you're trying to lower your hand. Okay, yeah, yeah. Okay, awesome. All right. No worries. So Chase like trading the SP 500, huh? SP 500 is a good index to trade. All right, 1 day chart. All right, see, all right, more you get more confirmations on the 1 minute, 1 and 5 minutes. So I see inverted, right? Got it inverted. Shoulder. All right, shoulder. So that was the inverted head and shoulders. And as you know, if you would have got in on this, and that shoulder is literally extra confirmation as a pullback to that breakout, right? The breaker retest, right? So it broke this zone, came back here, touched this zone, and took off, right? And let's look at how many pips that was. If you, well, when you, I'm not gonna say if. I don't like to say if because it's not if you get in, right? It's when you get in, when you make the money, not if you make the money, right? It's all in the wording. That's 39 pips just off the 5 minutes, and that actually happened probably the last last 25 minutes of the market closing. It did that big push. Not bad. Could have caught 40 pips, 39 to 49, 39 to 40 pips, of the SP 500 right before the market closed. It's awesome. All right, we're winding it down, winding everything down right now. Any questions? I have a question. When using
It's one in the chat.
I have a question. The 200 together with the 50. Are you using the 50 to identify that it is halfway in the direction above the 20, the 200? Well, no, just half. When I say halfway, I'm just saying that it pretty much pulls down 50%. Let me do a explanation. All right, so that's the 50. Yes, Miss Brown. You can unmute yourself.
So you're in trading view.
Yes, this is Trading View.
So currently in trading view, the market is closed.
You say, am I trading when the market is closed?
You're currently in trading view, right?
Yes, ma'am.
And I think you said something about the market. Is the market closed right now?
Usually, no. Well, the stock market is closed, but remember, Forex is 24/5.
Right. Okay.
Yeah, so you still could trade these pairs in your Forex account.
Right. Okay. Thanks.
Yes, ma'am. Queen Bowens, did you have any announcements or anything? Are we wrapping it up?
Nope, no announcements. Just apply. The information is being provided.
Yes, and tomorrow's call at 8:50 a.m. New York session and 8 p.m. Life Matters call with Dr. P. Yeah, that was it. All
We
right.
do have one last question,
One last question.
Jewel.
Yeah. Hey, yeah, I was just wondering, did you have another indicator that you could,
Another indicator. It's like I said, I don't really use much indicator, to be honest.
was that an indicator that's on your screen is showing right down at the bottom, down there?
Oh, right here. Oh, volume. Yeah, volume. Volume usually normally comes on your chart, but that's just the volume. But volume is usually if you look down here on the volume, it actually shows you how much volume is being pumped into the markets. Um, the VA is called the VPA volume price analysis is what it's called. So it pretty much calculates per candle how much volume is being pumped into the markets, right? So this one normally that's going to be really high when there's news because that's when the volatility is pumped into the markets. You're going to see volume at its all-time high when the news is out. Okay, awesome. So I answered that. All right. Well, reminders tomorrow call 8:50 in the morning. I will see y'all 8:50 in the morning at the New York session and 8 p.m. at Life Matters calls. As like I say, I will see y'all at the beaches and the banks, and I appreciate y'all's time.